Hello everyone, this is Mayank and welcome back to my channel. So today we're going to discuss about a particular stock which is there in my portfolio for last more than a year, and this stock is right now down by more than 45%. And now after going through a lot of documents, the annual reports, their competitor con call letters and everything, I decided that this is not a right time to sell the stock, rather it's a right time to buy the stock.
कोई सेंस है इस बात की?
In this video, I'm going to discuss the same thing. What made me to decide whether should I buy this stock? So let's discuss and jump to the stock right now. So the stock is Kanchi Karpooram, and this is up by almost 4% today, which actually reduced my losses from 45 to 42%. But what's important to understand is that how this company is not doing anything wrong, and how the external factors is leading to this company losing a lot of money, or rather not making any money as of now, and this is all a temporary factor. So to understand those parts, first let's see what this company do and how it impacts. So this company is a very old company, registered in around 1992, and they are situated in the South India, and they are South India's first and largest producer of variety of terpene and paper chemicals. If you see the product portfolio, they produce campaign, camphor, dipentine, double distilled turpentine, sodium acetate, trihydrate, ester gum, fortified rosins, gum rosins, isobonyl acetate, and pine oil. Okay, out of which 72% revenue comes from camphor, where dipentine produces 6% revenue, and remaining whatever we discussed, rates all produce around 21% of the revenue. The industry what the target are tires, paint, paper, food, pharma, rubber, and a number of international traders who deal with variety of industries. So they sell their product to these companies. If you go to the website and see what industry they deal with, these are the things they write. In the paint industry, like Asian Paints, Berger Paints, they are its customers. Then tires, they have CAD as their customer. In the paper manufacturing, the products being used. In the rubber factory, the products being used. Then producing real camphor, which is used for religious purposes, their product is used, and a lot of camphor is used in fragrances. If you see, go to Amazon. Just I'll go to Amazon. I'll show you one thing. How this camphor thing is used. Okay, so if you search for camphor here, so I have done before. So there is something called camphor diffuser, diffuser. Okay, which is electric bus diffuser. So if you see, this kind of things have come, and a lot of people actually using it. Okay, now you see Mangalam camphor. So Mangalam Organics is a competitor of Kanchi Karpooram. Mangalam Organics we discussed long back in our channel also, and this company gave a good return to its investors. Now it's a direct competitor for this company, and for this purpose of this video, I researched bought Mangalam Organics as well, because they produce quarterly con call letters, whereas Kanchi Karpooram doesn't produce this quarterly con call letters. They produce only annual reports. So if you go down, dig deeper and see how things work, so you see a lot of diffusers are there, and people actually buy. Then you put camphor tablets in that, and you put this in the socket, and you it's kind of use a room freshener. So these things, which are natural room freshener, these things are coming a lot in the usage compared to this chemical things and everything. Okay. So these are the diffusers. There's so many variety of diffusers. We discussed these things long back also. Then there's huge market for camphor. If you say camphor oil, okay, so we should understand the product of it. So the product is a mass market product which can be used by day-to-day life. So if you see, there is a nature essentials, use of nature, camphor essential oil. Then they have by Nilgiris also, eucalyptus oil and essential oil distillery. Then Pure Sense also, it's a big company. Pure Sense also does this almond oil and rose petal for massage oil. So camphor is used in a lot of industries, particularly in healthcare and everything. So this is what we can find from sites like Amazon and Flipkart. But for other usage, tires and paint is something which we cannot find in these marketplaces. But if you search for use of dipentine, then you get dipentine is used for it's actually a solvent for resins used to make paints, animals, lacquers, and polishes. So basically, dipentine is the one which is used for all these kind of things like tires, and then camping used for preparation of fragrances, and a food additive for flavoring. So see, and this includes isobonyl acetate, which they produce as a byproduct of camphor. So overall, what I want to say that all their products are in the mass market sector, and also a lot of its application is in their mass market sector, but used by B2B segment. So Asian Paints is a customer, the Berger Paints is a customer, then CAD is a customer. Like that, these companies which are doing very good, they are also their customers. Okay. Now this is what this company do. Revenue breakup, I told you they have around 72% from camphor, dipendent 6%, and others for 21%. Now let's close this and see what are the basic fundamentals of this stock. Fundamental, this company is a debt-free company, which is very important. Then if you see the promoter holding is 49.2%, where nothing is placed, which is important. And then their current price 496, which is not much above the book value. Then if you see the free cash flow for last 3 years is 65.4 crore. That means after investing, after all the operations, investing, expansion, and all those things, they have a cash flow of 65.4 crores, which they can invest back in the business. And recently they purchased the entire land and the factory where they are located, the entire building or which they have leased. Before now they have purchased it altogether by paying 9 crores. That is entirely from their free cash flow or internal accruals. So now they will not pay any lease amount also. So that will reflect slowly. That's a long-term game, but that reflects slowly in the numbers of this company. So this company has a market cap of 15 crore, where the free cash flow is 65 crore. So that gives a lot of legroom for them to invest and expand further. They already did some kind of expansion also. You see, their charts is almost down by from around 873 level to this level, and this is where I also purchased. Around 876 is my purchase price. Around 830 something my average purchase price. I purchased a little bit in this region. Okay. One point I missed is to highlight the stock P. Stock P is 10.9, which looks reasonable, but it is not reasonable. Let me show you that. Okay, ROC is 25.3, that is pretty good. ROE is 18, that is also pretty good in the current market standard for this company. This is pretty good. Okay, and why it is pretty good? Because of current market scenario. But for this company standard, this is not good. We'll look into that also. Now, if you go further down the line, one important point I will show you that I told you P is not up to the mark, right? So here, if you go to P ratio, if you go for last 5 years P ratio, the last 5 years P ratio median is 6.7, and right now they're trading at a PE of 10.1. So that means after taking so much of beating, also this stock is overvalued. That means a lot of people are still bullish in the stock. Why bullish in the stock? Because how this earning per share and price PE ratio is calculated. PE ratio is price by earning. So the earning has dipped so much that the PE has become high. So when PE has become high, still lot of people are not selling it. And the price has not crashed a lot, like should have crashed much more than this. Why it's not happening? Because a lot of people still are bullish on this, though the stock has corrected a lot. Because the nature of the stock, this stock is that this is a very good company, but external factors are not allowing it to play its cards right, and that's why there's a loss of revenue. If you go to the revenue part of the stock, sorry, if March 22, June 20, September 22, if you see, this is a horribly placed stock, 67.99 crore sales, which is almost highest kind of ever in the last around 10-12 quarters. But expenses have increased a lot. Their raw material costs increased 83%, which is highest ever in the last 12 quarters. And this is highest by a big margin. Why? Because this company is importing all the raw materials from outside countries like China, Brazil, Indonesia, and things like that. Same goes for Mangalam Organics also. I'm not saying only because of Kanchi Karpooram, Mangalam Organics also taken a lot of beating. It even also showed loss in the last quarter. Okay, loss of, like, instead of net profit, given net loss in the last quarter. That means the price of raw materials has spiked so much that this company is not able to make money. Your operating profit margin, if you see, this is a company which was making around 47%, 51%, 37%, then 20%. Before COVID, also making 20.62%. And last quarter, it made only 7.31%. This is the operating profit margin for this company. So they are squeezed to their skin right now because of this increase in material cost. But just to make a note and just to remind everyone, that material cost is not something which is going to be high throughout there in the future. Today or tomorrow, it is going to get normalized, and whenever this gets normalized, this company will again start putting the operating profit margin of around 27, 28, or 30% kind of thing they will put. And whenever that happens, their earning per share will increase and eventually justify the pay ratio, the price has to increase. So this is one of the rationale why I decided to buy this stock, because their reason of falling is not the sales. If you see, sales is very good, 67.99, almost highest. Okay, just before in September they had this kind of 9.11, so almost highest. But this is so high, expenses so high that they could not they kind of butchered completely here because of margin corrosion kind of thing. Okay, so net profit is kind of lowest. If you see, after this growth here, it's kind of lowest here, 3.949 crores. Okay, and that is the reason why their earning per share reduced a lot, 7.11, then 8.03, this kind of things. If you see profit and loss also, this company has not done anything wrong anywhere. From 38, 49, 51, 57, little dip here and there, 53, 56, then 59, 115, 188, 203 crores, 184 crores. This is the COVID year. Then 251 and then 240. So this kind of, they are doing everything good in terms of sales, in terms of net profit also. If you see, they were doing good only. So 130, 13, 15, 28, 26, 63. But these 2 years they had doing really bad. That's because of this corrosion thing. Okay, corrosion in the sense the margin corrosion because of increase in the raw materials. What gave me confidence to look back into the stock instead of selling this stock on my portfolio out and booking the loss is this thing. So their compound profit growth is 56% for last 10 years, where last 5 years they're compounding the profit at 59%. And this company is debt free. It's a debt free company. It's a completely debt free company. If you see here, it's a complete debt free company. So when a debt free company generates a free cash flow and they compound the profit at a rate of 50, around 50%, we can say that either they can have, either it can have only two things: either they will invest that money in expansion, or they will use the money for their personal profits. The management can use their money for the personal profits. Only two things happen, right? So when you have money in your account, it's a company, when you have a lot of money in their account because you are generating profit every year around 56% or 59% CAGR, then you have a lot of cash flow, or a lot of free cash flow comes in your bank account. So what you do with all this money? Either you expand, which they did. They invested a lot. If you see current work in progress, we'll just go in current work in progress. They were investing around 9 in March 2020. Then for this month, but right now they're not doing any work in progress. So what they have done here, if you see in other assets, they have a cash equivalent. So when you talk about cash equivalent, this company has a cash equivalent of 17.39 crores. So what happened here? It was 26 before, and now it is 17.9. So they purchased 9 crore had been invested to purchase this land, and that's why this fake cash has reduced by around 9 crores. So a lot of people think that, okay, what happens? They might use the money for personal usage and everything. So no, this company bought the land, and eventually that will add a lot of money in the long run, where they don't need to pay for the lease. Okay, so this is the difference that happened. I want to show you. So they have a lot of cash flow also, like cash equivalent also in the company. So right now what they can do, they can either invest for expansion, or they don't need to go for debt. They can put in the working capital. So working capital is required because they are going through a lot of, as I told you, the raw material cost has increased a lot. And if you go further down the line, the debtor days is also increased little bit, but the days payable is reduced from 30 to only 3. Okay, where the cash conversion cycle is reduced from 249 to 129. That's almost 50% reduction in cash conversion cycle. The cash conversion cycle is when the time delay between you manufacture something and then you get the money back from the dealers or distributors or retail market, any of the medium. So this is the cash conversion cycle. So cash conversion cycle has improved a lot. ROC wise, why I told you it's going bad, because you see last 2018 pre-COVID it was 50% ROC, then it was 69% ROC, then it was 45% ROC, 66% ROC, and right now they registered only 25% ROC. That's what I'm saying. From industry standard, they might look good, but from their standard they're not doing that great. So everything boils down to two reasons. First, their price is, raw material price very high, which they cannot control, due to which is margin corrosion. And now they have adequate, now this is the negative part. Positive part, they have adequate capital to sustain. They don't need to go for debt, and they have enough working capital, enough cash in their in their books, which they can use to fund their working capital. So this is the good part of this. Other good part is the management. So there are three things we discussed. First, the growth of the company. The growth of the company is tremendous. Profit growth is very good. Stock price CAGR, if you see 23% CAGR, they registered 23% CAGR registered for last 5 years. That's a tremendous stock price growth. Profit growth is good. They have a debt-free company, and they have, the management is very strong, that in this time also they are trying to reserve their cash by buying out the property or by not doing anything wrong. So I've gone through entire annual reports. There is nothing, a single thing which will find that this company is reporting wrong or any kind of shifting happening. So you can also go through yourself by all the documents and all the annual reports and everything. If you find anything, please let me in the comment section. Also, to help me also not to buy and dig deeper. But whatever I've gone through, auditor note and everything, there's nothing as such mentioned anywhere where they are losing money, or where they are kind of doing something wrong with the, from the management side, in the governance of the company. So whenever we can look for a company for long-term investment, we only look for things, either the market size, or they have a lot of competition kind of thing in the market. So here what happens, the market is not very big market. It's kind of very small market. The camphor is a very small market. It's not something like Asian paints or tiles or consumer durables kind of thing. It's a very limited market, and they have very limited pair. As far as I know, they have only two competitors, like two companies. One is Mangalam Organics directly into camphor, and this Kanchi Karpooram is directly into camphor. So they have only two players in the stock market listed, and so there's enough room for both of them to coexist. And then the company is growing a lot, so market is there. Company is growing a lot. It's a debt-free company. The cash flow is positive, and the management is quite good in terms of ethical values and everything. So I personally see that this is only about time when the raw material price will go down and this company will start again generating same kind of ROC and same kind of cash and same kind of growth. So when this happens, eventually this stock has to move up because earning per share will move up and they have to justify their PE ratio. And this is the reason why I am going to purchase it more and playing this particular stock. I'm going to play a long game and see how this performs. This is I have a lot of belief in this stock, and also I have some kind of belief in Mangalam Organics also. But I don't want to discuss about Mangalam Organics right now. Maybe I need to read more about Mangalam Organics and see. They need to understand what is happening. But if I have to choose between Kanchi Karpooram and Mangalam Organics, as of now I'll choose Kanchi Karpooram. Maybe once I complete the reading of Mangalam Organics, then maybe I can decide whether if I have to choose uh, change my view of Kanchi Karpooram versus Mangalam Organics, or should I stay with Kanchi Karpooram? And this is something probably if required, probably this is a very niche kind of comparison, but if required, maybe we can do in one of the videos, Kanchi Karpooram versus Mangalam Organics. So if somebody is interested in that or somebody has already done the comparison, you can put that information in the comment section. Maybe you can look into that. And so it will help a lot of people, including me as well. So this was all about this Kanchi Karpooram. Don't want to get into all the details and everything, but in a nutshell, I don't see any problem from management side. The only problem right now is from environmental or third external factors, the raw material cost and everything, which will eventually subsidize, like eventually become less subside kind of thing, and then this company will start making money. So I'll just keep my hold in the stock, and maybe whenever I get the opportunity to buy a little bit, I'll not buy in one shot. Maybe sip mode, I'll buy a little bit, and then probably I'll try to understand more every quarter what how things are happening, whether how they're utilizing the money, how they are trying to control the cost and everything. Whenever I see a positive every quarter, I'll buy some kind of stock, some amount, and see where it goes. So this is a watch game for me, where I'm trying to see if this bet of me can go in a long run, a multi-bagger kind of thing, or maybe I'll not say multi-bagger, but kind of compounder for me. So this is my theory on the stock. If you if you think it's helpful, if you think it was like kind of added some kind of value to you, do like the video and do share with your friends and family. And thanks so much for watching. Stay happy, stay safe.